Welcome to the CashStream Financial video, an introduction to invoice discounting. My name is Tim Lee and I'm the CEO and founder of CashStream Financial. This video is part of a series of videos relating to commercial finance which are available to view in the Learning Centre of our website, cashstream.com.au. In almost 20 years' involvement within the invoice discounting industry, I have seen the facility work incredibly well, especially for those that are in an expansionary phase. You might just want to pause the video to see if any of the enclosed comments reflect your business. If they do and your business is suitable, you should at the very least consider invoice discounting as an option. There are many misconceptions of invoice discounting, and I don't propose to dwell on the issues here. Suffice to say, one of the key ones that we hear regularly is the invoice discounter gives you 80% of an invoice and keeps the rest. Nothing could be further from the truth. It's more likely you'll pay between 0.15% to 1% against an invoice value, plus the cost of funds that you borrow, which clearly you're in control of. Other misconceptions are that invoice discounting is not like factoring. It uses the same financing tools, in other words, finance against invoices, but your customers know nothing of the lender's involvement. Finally, the final misconception is that invoice discounting is only good for companies going bust. In general business life, there are many companies going bust on the way up as on the way down. If your business is expanding, the facility is ideal as the finance grows directly with your sales. If your company is failing, however, the additional cash will only put off the inevitable if you use the monies unwisely. So, is your company suitable for invoice discounting? If you remember one thing from this video, it would be this. Any company whose product or service is buy, sell, forget is appropriate for invoice discounting. So, for example, take a simple product, the coffee cup on your desk. It's very simple to manufacture, and very few go wrong. Sure, the handle might come off, but in general terms, it's bought in, it's sold, and then it's forgotten about. If you take the other extreme, for example, the construction sector, where companies have complex contracts, there might be stage payments, interim valuations, liquidated damages, and disputes around every corner, it's all very messy. In other words, it's not buy, sell, forget. The difficult sectors for invoice discounting are those that are far from buy, sell, forget. In the examples above, you'll see some of the traditional areas that invoice discounters find it hard to finance. Construction, we've already mentioned. Professional services, such as accountants or management consultants, they often have interim billing. Computer software, especially bespoke software, which is usually based on stage payments. And large ticket manufacturers, where you have stage payments again. If you have any doubts or want further advice relating to whether you're appropriate for invoice discounting or not, please just contact our specialist invoice discounting advisors at cashstream.com.au or call 1300 79 30 60, and we'll be pleased to try and help. The costs of invoice discounting aren't more expensive than traditional bank overdraft facilities. But the key benefit is you get access to more cash than a bank would feel comfortable giving you. Banks might look towards funding a business at between 30 and 50% against the debtor book, if they will do it at all. But because invoice discounters specialize, they can advance more, up to 90%. The costs are usually expressed as a percentage of turnover, usually of the range of 0.15% to 1% of invoice value. In a number of cases, a fixed annual management fee can be negotiated. Plus then you have the cost of the funds that you borrow, which clearly you're in control of. These are usually in line with bank overdraft facilities not secured by property. In general terms, the costs of the facility are dependent upon the type of facility, the risks of your business, and the level of turnover. If you'd like further information on this side, please do not hesitate to contact us. We hope you found this introductory video useful, and any feedback is gratefully received. Personally, I've been working with invoice discounting for almost 20 years, and I do declare a vested interest in the market, but I have to say I have seen the facilities work so well for so many companies. I hope it can work for your company too.